All right, let's talk about the future of your CPA firm. You're always thinking about how to grow, how to be more efficient, right? And that thinking almost always leads to offshoring. So today, we're going to get into how you secure that future by focusing on the one thing you absolutely cannot get wrong in an offshore partnership: data security. Look, there's a really good reason why so many CPA firms in the US are partnering up with teams in places like India. The advantages are they're becoming too big to ignore. We're talking about a strategic shift that could really change the way this whole industry works. And here's why it's so tempting, right? It really boils down to three huge benefits. You've got major cost savings, you get the ability to scale your team up or down whenever you need to, and you get to tap into this incredible global pool of talent. I mean, that's a pretty powerful mix. But with all of that good stuff, there is one giant risk just kind of hanging out in the background. It's a single weak link that could not only wipe out all those benefits, but it could seriously hurt your entire firm. And here it is, we're talking about data security. When the information you handle is this sensitive, protecting it isn't just a good practice, it is the absolute non-negotiable bedrock of every single decision you make about outsourcing, period. So let's unpack this dilemma a little. What do we actually mean when we talk about client data, and what is really on the line for your firm? Because we're talking about some of the most sensitive information you can imagine. Yeah, this is not just some abstract concept. This is the real deal. We're talking about the crown jewels of your clients' lives. Their social security numbers, their tax returns, their private financial statements, even down to payroll and bank account details. This is the kind of stuff that needs Fort Knox level security. And what happens if that information gets out? Well, it's a complete catastrophe. You're suddenly facing huge legal fines, you could have money stolen directly through fraud, and maybe the worst part, you lose your client's trust forever. That can absolutely tank a firm's reputation.
So how does this even happen? It's almost never some big, dramatic, Hollywood-style hack. It's usually a lot quieter than that. It's about vulnerabilities. Let's walk through the four most common weak spots you'll find in an offshore setup.
So the risks usually fall into four main buckets. First up, unauthorized access. That's just people seeing stuff they have no business seeing. Second, you've got weak cybersecurity. Think sloppy password rules or old software. Third is a big one, not enough training. People make honest mistakes that cause huge problems. And finally, there's non-compliance with US regulations, like from the IRS, which can land you in some very hot water. Okay, that's the problem. It's big, it's scary. Now let's talk solutions, because this isn't about running away from outsourcing, it's about doing it the smart, secure way. Think of this as your 5-step playbook for building that digital fortress we were talking about. This is your game plan, and it has layers. It all starts with tightly controlling who can see what. Then you encrypt absolutely everything, whether it's sitting on a server or moving across the internet. After that, you train your team constantly. You use the best, most secure technology out there. And finally, and this is key, you never assume. You check your work with regular audits. Let's just dig into that first step for a second, because it is so fundamental. Role-based access is a really simple idea. People should only be able to access the specific data they need to do their job. Nothing more, nothing less. Just by doing this one thing, you dramatically shrink your risk if an employee's account ever gets compromised. And this, right here, is the question that keeps firm partners up at night. It's the elephant in the room. I can build this incredible fortress, but can I really trust the people inside to keep the gate locked? It's a totally fair question.
And the answer is a resounding yes. But you have to build that trust through process. This isn't about blind faith. It's about verification. You create trust with a rock-solid onboarding process, with nonstop training on the latest rules and threats, with those technical controls we just talked about, and with those regular audits to make sure everybody is playing by the rules.
When you really nail this, something interesting starts to happen. Data security stops being this thing you have to do to avoid getting in trouble, and it actually becomes a competitive advantage. It's not just about dodging bullets. It's about building a fundamentally better, stronger company. I mean, just look at the difference. On one side, you're living in constant fear of fines and a ruined reputation. On the other, you've got compliance locked down, you've got real peace of mind, and your clients trust you more. Going secure isn't just safer, it's just plain smarter business. It actually makes you more efficient.
And here's what that looks like in practice. This is the payoff. When you build on a foundation of security, all the metrics that matter start to climb. Client trust, way up. Your compliance, rock solid. And your team's efficiency gets a huge boost because they're focused on their jobs, not worrying about data risks.
And that really brings us to the core idea, the one thing to take away from all of this. Data security isn't just another item on a checklist. It's not optional. It is the foundation. It's what successful, scalable, trustworthy offshore accounting is built on.
So that leaves us with one final and pretty important question. As you're looking ahead, as you're making plans to grow your firm, I want you to take a really hard look at how you operate. Is your firm's foundation truly built to last?